Welcome back, everybody. I'm Chris Knight. I'm Business Development Manager here with Red Door Property Management. I'm joined with everyone knows Mike Taylor. Hi, Mike. How are you doing this morning?
Hello. How you doing, Chris?
I'm doing good. We're running through a quick one here. We've got another interview right after this with one of our own investors here that currently work with Red Door Property Management. So after you catch up on all these market reports, you've got to tune back in, check out the interview that we're going to do. It's something new that we're trying. So we're going to kind of zip through a lot of these market reports this month, although the data is very attractive from what we've currently quickly kind of jumped through just prior to jumping on here. So I think we're going to be able to do that without disturbing too much information, making it your way. So I think this is going to work, but we are going to jump through this. Mike, it's so good to be with you again today. Let's go ahead and jump right in. Let's save all the niceties for later. Let's talk about the Indianapolis market report for July 2024. Let's go.
Let's do it. So this is July. This is probably the peak of the season. So what we're going to see throughout Indianapolis, and I think almost most all of the submarkets, is we're going to see really positive news to report. Average days on the market's going to be down. Prices are typically going to be up. So this is the peak of the market. This is just before kids go back to school. Everybody's trying to rush to move in. And so that's what you're going to see in some of these numbers. So that's what we should see anyway. That's what we would expect to see on a seasonality basis. So jumping into Indianapolis real quick. We do see that. So we see an increase in average rent. We're up 7% from last year, 5% from last month. Average rent in Indianapolis is now $1,500. And active homes is 1,674. I think that's creeping up a little bit. We'll see that in the next slide. But 1,674 is how many homes we have on the market. Average days on the market, it actually is low. And again, we'll see some of the perspective on the next slide. But that is actually, I think, maybe the lowest that we've seen all year. So it's a little bit higher than I would like to see typically in July. But all things considered, and after what we saw last year, it's trending in the right direction anyway. I'm not super thrilled about 45. Ours is certainly less than that. But 45 is trending in the right direction. So that is good news. You can see it's down 80% from last year, which is crazy, and 14% from last month. So the trend line for average days on the market is going down, which is huge. We have seen that as a sticking point this year. And so to see that improve greatly in July is really encouraging. Jumping over to average sales price. Again, I know I always harp on this, but I just can't believe how affordable Indianapolis is. $246, $365. What an affordable price point for investors, for homeowners. Is just still so affordable. And there's a lot of those. I mean, and again, we look at that from an investor's point of view. Those are all homes underneath $500,000. So we kind of knock out the high end of the market, which obviously investors are probably not going to want to look at. So anyway, there's a lot of those available. 1,000 of those sold just last month. So there's lots of affordable homes in Indianapolis.
Yeah. And I'd be remiss if I didn't mention, I'm sure everyone watching here follows all of our socials, and you've seen a lot of the articles that we've been posting. There are a tremendous amount of professionals, experts in the investment space that are touting Indianapolis as one of the top markets to be investing in right now. So if you're not catching any of those articles, you better go over, you better subscribe, you better like the page so that you see some of those articles if you're an active investor in the area, which you absolutely should be. And I'm going to quickly touch on average days on market. A lot of the data that we pull is pulled from the MLS here in Indianapolis, and a lot of that data is going to be realtor driven. As you know, as I know, everyone is staying in tune with all these market reports that we're posting on a monthly basis. The average days on market is consistently higher. The reported data is consistently higher than what we are seeing as a property management company, without a doubt. On every single month that goes by, I'm a little bit surprised to see the average days on market that we're reporting. But the data is coming from the MLS, which is heavily driven by realtors, right? Which is they are strictly realtors assisting homeowners lease out a property. There are some property management companies that will list on the MLS, but it is more heavily driven, correct me if I'm wrong, Mike, more heavily driven by realtors who aren't experts in the space and are probably going to struggle at placing a tenant a little bit sooner or as quickly as someone who's an expert in the space, like a property management company. So that's probably why we are seeing the average days reported as slightly higher than what we are experiencing as a specialized property management company. Not only that, we're amazing at what we do, which everyone here already knows that. So, I mean, what do you think about that, Mike, as an explanation? I don't want to spend too much time here, but I thought I would at least mention both of those points.
No, I think it's a great point. I think most property management companies don't list their home in the MLS. There might be one or two, but for the most part, they don't. And there's various reasons behind that, which we don't need to get into today. But yeah, to your point, I think it's not what a realtor does on a daily basis. It's not their bread and butter, and so it's kind of sometimes even an annoyance if they're looking at renting a house versus selling a house. They're going to probably trend towards responding to a lead that is selling a house, whereas this is what we do all day, every day. So yeah, I would tend to agree. I think that's why we see our average days on the market always better than what we're reporting here through the MLS data.
Good. All right, good enough. Let's jump on. Let's see the next slide here.
Yeah. This was I kind of hinted at this one, but you're going to see the perspective of the active homes on the left. It is down from the beginning of the year, which is good. It's creeping up a little bit from June. We got a sneak peek. It's going to creep up a little bit more in in August if all stays the same, but it is similar to and even a little bit less than last year. So stable there. Nothing really major to report on active homes other than it's been decreasing over the course of the year, which is encouraging. And then to the right, the days on the market, as I mentioned, it is the lowest days on the market that we've seen all year. Again, 45 is not like super awesome for July, but if we look, we started at 72. May we were at 50, 52, and now we're down to 45. And then look at the price difference or the difference from last year. Last year was crazy, wild ride, made no sense. 124 days in June. I mean, that is crazy, crazy, crazy. So this is normalizing for sure. And that's really, really encouraging to see.
Yeah. I think enough said there. We've gone over these numbers. We're trending down on days on market, which we're going to consistently see here as we continue on here.
Yep.
All right, here we go. Fishers. All right, everyone knows my feelings on Fishers. Actually, no one really knows what my feelings are going to be month over month on Fishers. But hey, we're back. Fishers is back. Average days on market, 33. Everyone knows how much I watch the average days on market on every one of these. It's the first area my eyes go to as we go from slide to slide. 33 days on the market's down almost 30% month over month, which is much more in tune with my perception of Fishers. So this is looking good. We're up on our average rents as I'm working my way backwards here. We're up almost 2% month over month for an average rent of $23.38, which is consistent with the market. Now I'm going to jump over to the median rental price graph here. Now I'm going to hold little weight as we go through these graphics on our early indication into August. You'll notice that big dip there. I want to be very clear. That's nothing your eye should be drawn to, although mine are naturally drawn to the latest data indicated on the graph. That's only speaking to the first couple days of August because that's all the data that's out right now. We're in, correct me if I'm wrong, we're in August 8th, so we're just into the early onset of August. So that data is not going to hold up as we get into next month's market reports. So we're only going to look at July. We're still trending up, in my opinion, as clearly indicated, up to almost 2% in 23.38. This is great. This is a Fishers market that is stabilizing. 30 days on the market for your average is consistent with right before school start. I would imagine, though, I am going to talk about, because my kids just started school this morning, so it's a little bit of a shakeup, right? Everyone's day is mixed up as you're shoving your kids out the door and they're getting on the bus. I wonder what we're going to see in August, right? Because I always sense a little bit of a slowdown, right? As schools are, that's the only thing people are focused on. So the market kind of halts to a stop for about a week, maybe 10 days, and then it's right back off and running. But I would imagine we will see that in the data that we report next month.
Yeah, you can see it, Chris. You can even see it if you look at the 2022 price trend line there. I mean,
you're right. I think you're right.
I think the early indicator is probably a little dramatic. I mean, who knows? Time will tell. But it is a normal trend line is to peak in July and then to kind of trail off into December. So I suspect that we'll see a decrease in sales price as well as number of homes rented as we get into the fall and in the winter. And that's totally normal. That's totally just regular seasonality for Indianapolis.
That's a very good point. Yeah, you're right. It is indicated with last year's line there. Okay, yeah, I'm ready to jump on here. Let me mention the average sales price, which is down almost 2%. I would imagine that's going to be a surprising figure compared to our other market reports here, because I think average sales prices have ticked up in most, but we have seen a slowdown in the sales market, which if you're an active investor, you're probably well aware of that.
Yep.
Rental market trends. Here we go. Yeah, I mean, you look at your active homes. This is stable, pretty consistent. Going into August, the last 2 months certainly, but we've gone up in our June and then ticked down only 4 homes going into July. Days on market, as I'm very excited about, we are trending way down, going down to 33, which is our lowest of the year. Lowest days on market of the year, which shouldn't be surprising seasonality wise, but it's definitely exciting to see Fishers finally waking up and being in tune with the investor mind.
Yeah, I love it. This is look, the trend line for active homes almost exactly mirrors last year, which is interesting. Even a little bit less. That's good. We are having less active homes from June, July, and August. So, I mean, I have reason to believe that we should see the days on the market dip just like it did last year. So, I mean, it's the next couple of months are looking pretty good for Fishers.
Yeah, good point. Yeah. Let's move on. Noblesville. Everyone knows I love Noblesville. Look at the median rental price over time here. It's hard not to start right there. I know I just mentioned August is we're a little bit premature for judging August numbers, but I'm gonna ride that line all the way up. That looks amazing. Average rents over time were up 3.5% from previous month. That's what I like to see in Noblesville. Average days on market, although it's up almost 12% at 47. I hold little weight there. 47 days average as far as the data set does not concern me. As you've heard in previous market reports, especially if you're with a solid property management company, you're beating any of the data that's going to be reported here. But 45 days is not something that would scare me anyway. So Noblesville is absolutely still a super solid market. Average sales price is up almost 1.5%, which is exactly what I would expect as Noblesville is continuing to expand like a lot of these other markets that we're going to be talking about. Mike, anything to talk about Noblesville?
Yeah, I mean, I think average sales price too is to hit on from last year is up 6%. I mean, gosh, that is awesome. The average rent is at 2017. I mean, I don't know why, but I always think of like Noblesville as a more affordable market. And I always think it for some reason it's like $1,200 a month is like Noblesville. But I mean, to see it
I totally understand that perception. I know exactly what you're talking about. Yes.
So it's cool to see that market really come to fruition. It's really cool.
Yeah. Moving on. Here we go. Active homes. Man, that is a super stable line over time. And we were at 98 going into August. That'll change a little bit as we report August numbers, but we're right at 100 here for July. Average days on market, you'll see that trending up. So it's going the absolute opposite direction that we were last year, which, man, what an odd thing to get up to 95 in April and then down to 18 in August.
Yeah.
So stay tuned. We'll see what happens next month, but we're still at a pretty stable point at 47 for the month of July.
Yeah, agree. And it's not like inventory is going crazy. It's still trending down from the beginning of the year. So no, like really alarm bells or anything. It's just interesting that Noblesville, while the average rent is going up, the days on the market is also going up, which doesn't necessarily make sense. But I don't know. I'm not super concerned about it.
Yeah, same here. Okay, into Westfield. I know you're all about it.
Yeah, my favorite market. Honestly, there's not a ton to report here other than just stability here. We had a little bit of volatility over the last couple of months. We thought maybe it had peaked out or maybe it was going to peter out a little bit, but it seems like it's stabilized here. Active homes on the market's 83. That's good. We'll take a look at that in the next slide as far as how that compares. Average rent, I mean, look at the trend line. It's almost mirroring last year, just slight bit above last year and last month. I mean, 0.35% above. This has had a huge run up over the past year, 2, 3 years. So, to only see small increases is not discouraging to me at all. Westfield is still a great market with a lot of room to run. Averages on the market is 33. That is great. Even look at that, it's down almost 70% from last year, 11% from last month. So that is good news to report. And then average sales price just continues to tick up there. Just small increases, but up almost 0.5% from last year, 1.34% from last month. So just kind of like stabilizing and trending just slowly but surely onward and upward. So I mean, really not a lot of news to report, but it's not negative. It's positive.
Yeah, it absolutely is. And these small increases, whether up or down, in my opinion, still screams stability, right?
Yeah.
Stable market, and that's a market that you want to be part of. Now, the average days on market again has jumped all over, just like my Fishers area. So, we have that in common.
Let's look at the next slide so we can see how it compares kind of over the year. I mean, yeah, look at that. So inventory is way down from the beginning of the year, which is great. And that's going to only help days on the market. So I don't know why it had so much in January. That was a real problem / trend everywhere. There was so much inventory in January, but it is stabilized. It is trending down. That's good. Days on the market is 33. That's the lowest of the year. So it's been a little bit of a wild ride, but it's trending in the right direction. And I have no reason to believe, especially with the inventory or lack of climbing inventory, that's going to go anywhere but the same or down a little bit. So Westfield's solid.
Yeah, and I'm going to take just a couple seconds here to mention, just to make sure that we're providing as much insight as possible to our viewers, is active homes. One reason I suspect that we're seeing slightly lower inventory as we got into April, May, June, and July is there was a bit of a sell-off. Although these are all growing communities, Westfield included, a tremendous amount of new home growth going on in that area. There was a sell-off. Everyone who was not a seasoned investor, maybe they found themselves being a reluctant landlord, they were taking advantage of the hot sales market that was happening towards the front end of the year. And they were putting their house on the sell or on the market for sale, and they were taking their equity back home. So I think there was a big sell-off, and then everything apparently began to stabilize following April, May, June, and then this month. So I would speak to that, to why we're seeing a lot less inventory on the market.
Yeah, which actually you should check out. Let me just do a plug for a video I did. I think last month. I took a look at the hot sales market, and we did the top 5 reasons that you do want to sell your house, and then the top 5 reasons that you don't want to sell your house. I'm a buy and hold kind of a guy, so I trend more towards top 5 reasons not to sell. I think there's way more upside potential, especially in like a Westfield market. You're going to take your money out, and who knows what you're going to do with it, put it in the stock market and lose 4% in a day. That just happened last week or this week. But real estate, I love it as an investment. I'm a buy and hold kind of a guy. So I'm top 5 reasons not to sell. That's my vote.
There you go. Yeah. A shameless plug. Check it out. It's on YouTube. Find us, Red Door Property Management on YouTube. Moving on, Greenwood. All right, I relate Greenwood. It's almost an identical market in my mind perceptually as Noblesville, and the numbers really speak very closely to that. Except for our median rental price, our early look at August numbers is trending up, where in Noblesville it appeared to be trending down. But in July we have 124 active homes on the market. Average rents are down just over 0.25%, which is almost nothing to speak of. It's up over 9% year over year, which is what we should be talking about. Now, the next thing that we need to be talking about is our average days on market, 31. It's down 79%, which I believe, if I remember right, when we went over last month's market reports, there was a little bit of a blip that we had in the previous month. So I think that this is more indicative of the current market, 31 days on the market, which is amazing. Now, something that immediately stood out to me when we took a look at this is the average sales price, down 7.35% month over month. Is this a blip? Is this incorrect data that's been reported? I don't know yet. We'll see what happens next month. But that is surprising to see that your average sales price. Now, again, as I mentioned it during the previous market reports, the sales market has, in all intents and purposes, stalled out. It's come to almost a complete halt. So home prices, I would suspect will begin to correct just slightly. But that only time will tell if that's going to be an accurate statement or not.
I gotta believe that that's probably a little bit of a blip. That's a huge correction in 1 month. And I'm just pulled up the data for Greenwood sales for the year, and going back to February, like it's like 313, 323, 314, 333, 325. So we had 2 months of like really strong, and then 1 month of really bad. So I gotta believe that's a little bit of a blip in the radar. I can't believe that's gonna stay.
I'm sure you're right. Let's keep it moving here. Active homes in the market, 160. I mean, that's completely consistent with what we've been seeing since March. Nothing. And there it is. Look at days on market. We saw a blip last month at 154. Greenwood. Look, Greenwood's a little bit smaller of a market. Maybe we're just going to be accustomed to blips happening in the Greenwood area. But we need to look at data over time. And 31 days on the market is awesome in July. We'll see if it ticks up just slightly come August. But yeah, if you look at the end of the year last year, man, I'll ride that line all day long. So if we can wrap up the year consistent with that, I'll be excited. So nothing to be worried about there.
Yeah, and I always like to look at the active homes, because the inventory does relate to days on the market, and what we're seeing is stability / going down a little bit. We actually have less inventory than last year, so that leads me to believe that days on the market is going to be stable going into the fall and winter of this year.
Yeah, absolutely. Okay, Anderson. Now, Anderson's a little bit newer of a market that we've been talking about, only because there's a lot of investor-driven attention going on in Anderson, and rightfully so. I mean, as Noblesville continues to expand, Fishers continues to expand, they're only getting closer and closer to the Anderson market. So it's an early look that we're providing here for Anderson. Active homes, 130. Your average rent's at $884. No surprise, it's ticking up almost 5% month over month. I would expect, even going into the winter months, I wouldn't be surprised if that continued to tick up just slightly. There's a lot of investor-driven activity. Average days on market's 18. It's down 25%, which means, I mean, if you're under 30 days, that's the talking point to me. You're under 30 days. 18 days on the market is just stellar. The point is you're under 30 days. That's awesome. That's awesome.
That's amazing. I think the other big thing here is affordability. We talk about this every time we talk about Anderson, but it's such an affordable market, both in terms of rent and in terms of sales price. Yeah. You look at Noblesville, which is probably the closest market that we report on, right? And if I remember, they were right at $300,000 for their average sales price. I think it was like $301, if I remember correctly.
$304, I believe. Yeah.
Yeah. So I mean, that's $120,000 difference, roughly, give or take. That's big. And then, I mean, you've got affordable rents. You hear all the time of, housing shortages for affordable rentals. And well, I mean, gosh, look at the Anderson market. You can still work in Indianapolis. You can work in all of Hamilton County, and you can still have affordable rent, and you can have it as an affordable rental as an investor. So this is a really attractive market if you're looking for affordability.
Yeah,
and average days on the market is 18 days on the market. So I mean,
exactly. Yeah, at least it's affordable now. I mean, that's why it's important that you get that early look, because you'll see we're up 22% month over month, up almost 10% year over year. I mean, so like we've been saying over the last several months, and why we're paying close attention to the Anderson market. Well, that's why you're going to continue to see these increases. Anderson is a market, if you are new to investing and you're wanting to get your feet wet a little bit, well, here's an easy way for you to do that. Be looking at the Anderson market.
I mean, 884 is shockingly low, especially when we're talking about Noblesville and Fishers. I mean, in the $2,000, $2,400 a month, that is shockingly low. I mean, I can't imagine it's going to be under $1,000 for long. I think end of this year, beginning of next year, you're going to start to see $1,000, $1,100, $1,200, $1,300, because that's still very, very affordable.
Absolutely.
So these days, there's so much room to run on these rents to increase them.
I mean, it's a very good point, and I agree with everything you've stated there, which is so unusual for us. Wow. Yep. So I agree with all of it. Here we go. All right, we're into the West Side market. What we're going to do here, I'm going to quickly kind of run through Avon, Brownsburg, and Plainfield. In fact, Mike, when we post these, we might discuss just kind of posting these up as the Westfield Roundup rather than posting separately. We can talk about that later. But for the long form video here, I'm going to run through the West Side Roundup, Avon, Brownsburg, Plainfield. Here we go. It's very similar data that we're going to be reporting. Mike, just feel free to jump in when you have something spicy to say. So
yeah, no, you're going to see that a lot of these are almost identical in terms of active homes, days on the market, the trend line. So go for it.
Yeah.
You're going to see it's super similar.
Here we go. Reporting the data. Active homes in Avon, you've got 42, average rents 1950, which it's stating down 8.5%. I'm not worried about it. Avon's a stellar market, and you know why? Because average days on market is at 20. It's down 45%. We saw a little bit of a blip last month in the average days on market, which that little blip only indicated, if I'm not wrong, if I'm doing the math right, somewhere just under 30 days on the market. So yeah, still average days on market are awesome. Your investor point of view, so homes that are selling under $500,000 in the Avon market, you're down 2%, but you're looking at an average price point of 340, 457. This is a stellar market. This is a stellar side of town. All of these areas are going to be primarily driven by their awesome school systems. There's a ton of activity, a ton of new growth, a ton of new residential construction happening in all three of these areas. So pay attention to the data as it's reported. Brownsburg, 35 active homes in the market. Look at that. Average rents are almost identical to the Avon market. There's no surprise there. 1945. It's up. I mean, it's almost not even worth speaking of, but it's up nearly a percentage point. You look at the sneak peek for August there, which I'm holding very little weight in, but it should be indicative of something happening. We should see average rents potentially tick up as we talk about next month's market reports. Average days on market, again, no surprise here. We're at 23. We were at 20 in Avon. This is a super stellar market. Our average sales prices are right in line with the Avon market. We're down about 0.5 percentage point. So if you're looking at Brownsburg, you're certainly looking at Avon. You're most certainly looking at Plainfield. They're all very similar markets for your average investor. Plainfield, here we go again. It's going to sound like I'm on repeat here, but your active homes, you're at 36. The other two, we were near 40. Average rents, 1790. Here we go. Plainfield may be the market for you. We're up almost 2% month over month at 1790. Average days on market. Man, if you're not looking at the Westfield, if you're worried about average days on market, you're looking at the West Side. I think I said Westfield a moment ago, but West Side for sure. Average days on market at 13. That's amazing. Now your average sales price, again, it's ticking down. So I'm going to just blindly blame that on a slow sales market. Again, that's an overcorrection for such a short period of time, but the sales market has slowed down. So if you are thinking about renting your home on the West Side, pick up the phone. You got to give us a call. Happy to run a free rental analysis anytime. If you need to move on, if you're moving for a job change, let's talk about potentially renting out your property rather than selling it. Mike, that concludes our Westfield Roundup. What do you want to say about any of these three markets?
I mean, to me, the fact that all three of them, Avon, Brownsburg, and Plainfield, all have days on the market under 20. I mean, that tells me that the market is strong out there. There's lots of demand, probably not enough supply. So great time to put your home on the market for the West Side. I mean, it's strong, like you said. Good schools, good parks, all that good stuff. You're going to get good renters out there. So, but gosh, days on the market just speaks volumes on this side of town.
You're exactly right. A low volume of available properties. I mean, between all three markets, and I ran through them pretty quickly there, which I'm sure anyone watching is like, wow, he ran through that really, really fast. I mean, we're at 120 active homes in the entire West Side active market.
That's crazy.
Yeah, that's low inventory for the entire west side of Indianapolis. Yeah.
We say they're smaller markets when you break them up, but when you put them together, Avon, Brownsburg, and Plainfield, that's it's definitely a big geographic area. I mean, it's only 100 homes roughly on the market for all of those areas. That's crazy.
Yeah, exactly. I couldn't agree more. Yeah. All right, let's keep it trucking. Whitestown, we're headed up north. We're on our way to Lebanon. Mike, what's going on in Whitestown?
Whitestown, to me, is similar this month, and a lot actually to Westfield. So it is stabilizing, not like a ton to report here in terms of not a lot of drama, but average rents are up. They're up 5% from last month, 3% or opposite, sorry, 5% from last year, 3% from last month. So trending definitely in the right direction. Not a ton of homes for sale, 20 or for rent, sorry, 28 homes on the market. Days on the market's 45. That's good, not great. But it's just stabilizing. The sales price is 365. So kind of in line with Westfield, with Noblesville, with Fishers, right there. And like we always talk about, this is kind of on the corridor to Lebanon. And I think next month we're going to start including Lebanon here as our new market report, because we think that there's a lot of potential up there, which then makes a lot of potential in Whitestown as well, because that whole area, the whole corridor, really, I think from Whitestown almost all the way to Lafayette is going to be seeing a lot of growth over the next 3, 5, 10 years. So this is part of it that kind of links Indianapolis to that whole area. So a lot of room to grow, I think, in Whitestown as well.
Yeah, exactly. I'm really excited about Lebanon. In fact, I was a little bit saddened to see that we weren't reporting on Lebanon yet this month, but look alive. We are going to get Lebanon up and on these market reports. There's a tremendous amount of investor activity happening in there, a lot of economic growth. I mean, if we're going to report on Anderson, we have to be talking about Lebanon. And not only that, yes, the corridor, the Whitestown corridor right into Lebanon is going to be an excellent route to the Indianapolis market. So we're gonna add it. Stay tuned. Check back in next month. Hopefully, you'll be able to get the most recent data and you'll know what's going on. So that's going to wrap it up. Let me make sure. I know in previous, yep, we are clear. I'm not missing any other market reports like I did last month. We are good. We are done. We're going to jump over here in just a moment for our investor interview, who is currently under our management program. This is going to be an awesome little tutorial on how maybe you can enter the investor market. What are people doing? How are they getting into the investor market? And not only that, what's important about hiring a property management company? What should I be looking for? What do you like? What do you not like? It's going to be a really raw walkthrough with one of our own. So stay tuned for that. I'm super excited about it. Yeah, I can't wait. Mike, anything you want to say to wrap this up?
No, it's exciting to see. I think we kind of called the average days on the market improvement about 2 months ago. We saw the inventory going down, and we said, hey, I think average days on the market are also going to go down. So it's encouraging to see that. I love that. I love the fact that days on the market are going down. It's good for all investors in Indianapolis. So I'm really excited about the market and things to come for the rest of this year in 2025.
Awesome. Thank you guys so much for tuning in. Mike, thank you for your time. I appreciate it. Be sure to like and subscribe if you haven't. Stay tuned to these market reports. We'll bring you more next month. We'll catch you in the next video.
See you guys.